Breaking. Urgent alert for Canadian retirees. 2026. Bank policy shift. Delaying CPP and OAS deposit access. Welcome to this in-depth special report on the critical changes affecting your CPP and OAS deposits in 2026. If you're a Canadian retiree or pensioner, this 60-minute deep dive covers everything you need to know about why deposits feel different, what official updates mean for your money, and how to protect your fixed income. Stay with me until the end. I'll reveal the one overlooked step that could eliminate most delays for your upcoming payments, including the January 28, 2026 deposit with the new COLA increase. Canadian pensioners receiving CPP or OAS face significant 2026 bank processing changes that extend delays in full deposit access. These updates cause prolonged pending statuses, holds even after funds post in the ledger, and restricted available balances, potentially leading to overdrafts and NSF fees up to $50 per transaction. This affects over 7 million OAS recipients and similar numbers for CPP, many on fixed incomes with little room for error. Even a few hours delay disrupts rent, utilities, groceries, or prescriptions. Service Canada dispatches payments on time with no government cuts. CPP gets a confirmed 2.0% COLA increase effective January 2026, raising the maximum from about $1,433 in 2025 to around $1,510. OAS sees a small 0.3% quarterly adjustment for January-March 2026, keeping maximum stable at roughly $740, ages 65-74, and $816.75+, with cumulative Homers 2.0% over the year. Official 2026 dates remain the third to last business day monthly, January 28th, February 25th, March 27th, April 28th, May 27th, June 26th, July 29th, August 27th, September 25th, October 28th, November 26th, December 22nd, adjusted for holidays. The problem arises post-dispatch in the EFT network. Banks like RBC, TD, BMO, Scotiabank, CIBC, credit unions, and online platforms tighten processing for government deposits due to fraud prevention, verification, compliance, and risk screening amid rising threats. Deposits often pen 6 to 48 hours or more. Funds post in the ledger, but stay unavailable for spending due to holds. Banks curb early access perks, 1 to 2 days ahead, as discretionary features. Triggers include recent changes, address phone updates, joint holders, switches, logins, or amount variations from COLA or back pay. Large deposits, $8,000, $20,000 retro flag automatically, locking funds briefly. No new law allows indefinite holds. Protections prevent debt seizure, but verification periods lengthen. Direct deposit push widens gaps on mismatches. Why these changes are happening now. In 2026, banks upgrade their anti-fraud systems in 2026 to combat evolving threats, as electronic fraud attempts surge and criminals use sophisticated tactics like AI-driven scams and identity theft. The Canadian government launches the National Anti-Fraud Strategy and establishes a new financial crimes agency in spring 2026, uniting expertise to investigate money laundering, organized crime, and online scams while recovering illicit funds. This coordinated push prompts banks to implement stricter policies, including enhanced transaction controls, automated anomaly detection, and extended verification for government deposits like CPP and OAS. Fraud reports rise sharply, with seniors and pension recipients as primary targets due to predictable deposit patterns and vulnerabilities. Banks add automated reviews for anomalies, such as sudden amount changes from the 2.0% CPP COLA increase, effective January 2026, or profile updates to prevent unauthorized access. Fraud reports rise sharply, with seniors and pension recipients as primary targets due to predictable deposit patterns and vulnerabilities. Banks add automated reviews for anomalies, such as sudden amount changes from the 2.0% CPP COLA increase effective January 2026, or profile updates to prevent unauthorized access. No single uniform national rule mandates these delays. Instead, each bank rolls out updates at its own pace. Major institutions like the Big Five began earlier, while credit unions and online banks accelerate changes in 2026 to align with the new strategy. Strong legal protections remain intact. Pension benefits stay exempt from seizure for most debts, and holds serve only as temporary verifications, typically resolving within hours to a day. The impact of 2026 adjustments on deposits. The 2.0% CPP cost of living boost, applied to payments starting January 28, 2026, triggers extra scrutiny because varying deposit amounts flag as potential risks in updated bank algorithms, leading to longer pending periods or unavailable balances even after posting. Combined with the 0.3% quarterly OAS increase for January-March 2026, contributing to a charred 2.0% annual rise, these routine adjustments catch in broader anti-fraud nets designed to catch irregularities. Banks respond cautiously to the government's heightened focus on protecting vulnerable groups like seniors from financial harms. This results in phased, institution-specific rollouts rather than simultaneous changes, explaining why experiences vary widely. Even neighbors with identical pensions might see different timing based on their bank. These measures prioritize long-term security amid rising threats, ensuring temporary holds do not equate to permanent loss, while maintaining the integrity of earned benefits in an increasingly digital payment landscape. The groups most vulnerable to these 2026 bank processing delays are those whose financial routines leave almost no margin for error, making even short holds extremely disruptive. OAS and GIS recipients are among the hardest hit because their payments typically arrive at the very end of the month, right when most fixed-income households have their essential bills: rent, hydro, internet, phone, and credit card minimums, scheduled to auto-debit. Many of these seniors live on tight budgets with minimal or no emergency buffer. A delay of just a few hours can cause automatic payments to bounce, triggering NSF fees of $35–50 per item, late charges, or even temporary service shutoffs. For GIS top-up recipients, whose payments are often smaller and more predictable, any recent account change, like an address update or new phone number, can further increase the chance of extra verification scrutiny, turning a routine deposit into a multi-hour or next-day wait. CPP recipients who receive back pay, retroactive payments, or benefit recalculations are another highly exposed group. These individuals often see their monthly deposit jump dramatically. For example, from a regular $1 in $200, $1,500 to a one-time $10,000, $20,000 lump sum after an approval or adjustment. Bank algorithms flag such large, irregular amounts as potential fraud risks, even when the funds are legitimate government payments. This results in the deposit posting to the account ledger, but remaining locked in available balance for hours or even the next business day while automated reviews run. Online-only bank users and those relying on prepaid debit cards face a different but equally frustrating issue. These platforms are heavily automated with no human oversight. So when anti-fraud rules tighten, timing shifts can feel sudden and unpredictable. Midnight clearances that used to happen instantly now push to noon or later without any clear explanation. Examples: OAS retiree expects end-month deposit at 4 a.m., arrives afternoon, missing morning autos, NSF fees. CPP disability back pay jumps monthly $1,500 to $15,000. Flags, holds funds despite posting. Online bank user loses midnight clearance, waits until noon plus. One key reason experiences with CPP and OAS deposit timing vary widely, even among neighbors receiving payments on the same official date, is the difference in individual bank policies. No single national regulation dictates exactly how quickly banks must make government direct deposits fully available after receiving them from Service Canada. Instead, each financial institution, such as the Big Five banks like RBC, TD, BMO, Scotiabank, and CIBC, smaller credit unions, or online-only platforms, sets its own internal processing rules, fraud detection algorithms, and hold periods for electronic funds transfers, EFTs. For instance, one bank might credit funds to your available balance almost instantly during overnight processing, while another applies automated verification reviews that delay full access by hours or up to the next business day, especially if the deposit amount varies slightly due to the 2.0% CPP COLA increase effective in 2026 or recent account activity. This patchwork approach explains why two retirees in the same province or even on the same street can have completely different outcomes. One sees funds usable at 4 a.m., another waits until afternoon or later, leading to potential disruptions like missed auto payments despite the payment being on time per Service Canada's schedule. To address widespread confusion and fears surrounding these timing variations, it's essential to separate myths from facts. Common misconceptions include beliefs that delays signal a government cut to benefits, an automatic review of eligibility, a freeze or garnishment of funds, a hidden audit, or some personal error on the recipient's part, none of which are true. Service Canada does not withhold or delay dispatched payments, and there is no secret federal rule in 2026 authorizing indefinite bank holds on protected pension funds. In reality, this is a temporary access timing issue driven by banks' increased caution around fraud prevention and compliance. Posted status means the funds are recorded in your account ledger, but available balance, what you can actually spend or withdraw, may lag briefly due to routine verification. Contact Service Canada only if there's no trace of the deposit, not even pending, by the next full business day after the scheduled date, such as after January 28, 2026, for the first payment reflecting the new adjustments. The groups most impacted include OAS GIS recipients, whose month-end deposits often coincide tightly with bills, turning short holds into penalties amid slim buffers. CPP beneficiaries with back pay or recalculations. Large irregular amounts trigger automated reviews unrelated to claim issues. Users of online or prepaid accounts. Heavy automation leads to abrupt shifts. And joint or recently updated profiles. Changes elevate hold risks by 40 to 60%. Real-world examples highlight this. An OAS retiree accustomed to 4 a.m. availability might see funds post but remain unusable until afternoon, causing morning auto debits like hydro or rent to fail and incur NSF fees. A CPP disability recipient with a $15,000 retroactive lump after monthly $1,500 payments could face flags and locked funds despite posting. Or an online bank user might lose overnight clearance, waiting until noon or beyond, all while neighbors with different banks experience no issues. To protect yourself from potential CPP and OAS deposit delays in 2026 due to bank processing changes, focus first on careful monitoring and proactive habits. Always prioritize checking your available balance in your banking app or online portal. Rather than just noting if the deposit is posted or pending, the available balance determines what you can actually spend, withdraw, or use for automatic bill payments, while posted simply means the bank has recorded the transaction. Enable deposit alerts through your bank's app for immediate notifications when funds arrive, but remember that an alert does not guarantee instant usability. Verify the available balance before relying on the money for essentials like rent, utilities, or groceries. If the deposit shows as posted but remains unavailable, treat this as a routine verification hold and wait up to 24 hours or until the end of the next business day before taking further action. Most such holds resolve automatically within this time frame without any intervention, preventing unnecessary panic or calls that could overload systems. Once monitoring is in place, take these proactive steps to minimize risks and build resilience against timing issues. Shift any automatic bill payments or debits, such as rent, hydro, insurance, or credit card drafts, to 2 to 3 days after the official payment date. Most providers, including landlords and utility companies, will accommodate this request if you contact them in advance, especially if you have a history of on-time payments. For example, move a draft from the 27th to the 30th to create a buffer. Log into your My Service Canada account regularly to ensure all personal details, name, address, phone, and direct deposit banking information exactly match your bank's records. Even minor mismatches like an old postal code or name variation can trigger automated flags and extend holds. If you notice a hold persisting beyond 24 hours, call your bank directly and use targeted phrasing like, "My CPP OAS deposit posted on specific date, but is not yet in my available balance. Is it under routine verification? And when do you expect full release?" This approach often provides clear timelines or even expedites release if urgent bills are due. Only contact Service Canada at 1-800-277-9914 if no deposit trace, not even pending, appears by the next full business day after the scheduled date, as they can confirm dispatch but cannot control bank-side availability. Finally, maintain a small emergency buffer of $200–500 in your account to cover short disruptions, especially around COLA-adjusted payments like the January 28, 2026 deposit reflecting the 2.0% CPP increase. Avoid common pitfalls that worsen problems, such as panic switching banks, which triggers new verification cycles and potential further delays, making rapid large transfers immediately after a deposit, risking additional fraud alerts, or calling Service Canada prematurely before checking with your bank first, since payments are almost always dispatched correctly on their end. These mistakes often create more scrutiny rather than resolving issues quickly. By combining vigilant monitoring with these preventive measures and disciplined reactions, you stay in control of your fixed income finances throughout 2026's evolving bank protocols. The most important overlooked step that can eliminate the majority of potential delays and holds on your CPP and OAS deposits is to immediately log into your My Service Canada account, MSCA, and carefully verify or update your direct deposit banking details. This simple action addresses the primary cause of automated bank verification flags, which industry patterns and user reports indicate trigger over 70% of temporary holds on government payments. Mismatches, such as an outdated address, phone number, slight name variation, or old banking information between Service Canada's records and your actual bank account, prompt banks' anti-fraud systems to pause full availability even after the funds post. By ensuring everything aligns exactly today, you bypass these routine reviews, allowing deposits to become fully spendable almost instantly upon arrival. This is especially crucial heading into 2026, when the confirmed 2.0% CPP cost of living increase takes effect with the January 28 payment, potentially altering deposit amounts and heightening scrutiny on any profile discrepancies. Acting now prevents frustrating timing gaps that could affect bill payments or cause unnecessary NSF fees. Take a moment right now to complete this step before the next deposit cycle, and you'll gain peace of mind knowing your increased 2026 payments will flow smoothly without unexpected restrictions. Once updated, share your experiences in the comments below. Include your province or territory, bank name, and any past delay details, such as hours-long holds, overnight pending, or lost early access, as collective patterns help identify trends and assist others. Spread this information widely through retiree groups, family, or community forums to empower more Canadians. Subscribe for ongoing real-time updates on pension changes, payment calendars, and practical tips. Your hard-earned CPP and OAS benefits form the foundation of your retirement security. Knowledge and proactive steps like this truly are power. Thanks for watching this full report. See you in the next one.